to our top story. Residential property prices slumped to its steepest rate in the second quarter. That's on the back of the continued decline in the prices of condominium units and single houses. Data from the Bangko Sentral showed that the residential real estate price index contracted by a record 9.4% in the April to June period. Now, this is worse than last year's 4.2% plunge, and it is also the biggest annual contraction since the data series started in 2016. The Bangko Sentral said the COVID-19 pandemic continued to dampen demand for residential property. Nationwide, the prices of condo units declined by more than 14%, while single and attached houses saw prices drop by a record 7.4%. Now, the Philippines is seeing a sharp decline in the growth rate of COVID infections, but the Health Department and the Octa research team both warn that we are not out of the woods just yet. From about 30% 3 weeks ago, the country's COVID growth rate plummeted to just 4% in the last 2 weeks. Now, in fact, Metro Manila has been downgraded to moderate risk as COVID cases continue to slide. But generally, the rest of the country is still at high risk. And while transmission is slowing down, Health Undersecretary Maria Rosario Verher says the trend is still inconsistent. She says several factors may have caused the dip in recorded infections, including lower testing output in the NCR. The Octa research team echoes this warning against letting our guards down too early, saying they are not convinced that NCR should now be classified as moderate risk, given that our hospitals are still full. Despite that, Octa believes the implementation of the new granular lockdown and alert level systems is showing good results. Now, kicking off our market report with a check on the property index. This, of course, as we had reported, that slump in second quarter in terms of residential. And you can see that save for one, which is Robinson's Land, the rest of the index seems to be either flattish or sitting out a rally that is down by 0.13%, dragged down by Philinvest Land, which is down by 0.9%, Ayala Land, and Mega World. So these are the three of the biggest property companies as well. And it really isn't just our own local index, which is being impacted by the property space. You've also got the rest of Asia. And this, according to Bloomberg analysts, they're saying that China developers Evergrande debt crisis saga has been putting pressure on Asian markets. And you can see quite a mixed picture here with Malaysia down, but the Nikkei 225 up by a touch. They also did mention that this is just going to be the start of a week which will see us under pressure, particularly with traders keeping an eye on that. Right now, the latest is that China Evergrande's group has an unusual silence about a dollar bond interest payment that was due last Thursday, and they did not say anything about that, and they have been put in focus on what might be happening on this 30-day grace period. Meanwhile, you've also got China's housing regulators stepping up oversight on them, saying that they're going to be looking into the funds, making sure that those funds are used to complete the housing projects and not diverted to pay creditors. Let's take a look at how our own index is performing. We are actually up a touch by 10.80. That is up by 0.16% here. And let's take a look at which sectors. We already saw properties in the red, but you can still see financial staging a bit of strength here, up by 0.8%, followed by industrials and holding firms. So again, properties and services sitting this out. And let's take a look at which ones are leading the charge here. Aboitiz Power and its parent Aboitiz Equity Ventures, both on the top of the leaderboard here, together with Converge, Metrobank, and LTG. But on the downside, you've got AC Energy, another property player here, a direct competitor, really down by 0.9%, together with AGI and ICTSI. Now, here to chat with us about more on the markets and what to expect as we kick off this trading week, we have with us Aaron Sai, of course, of First Metro Securities. Welcome back, Aaron.
Hi, good morning, Danny. Thank you for having me.
Okay, Aaron, does this new study of the Banco Central surprise you in terms of the property space, especially since we were hoping that residentials would actually save the day here, compared to commercial real estate, for example, with people risk averse putting their money into things that, are technical or usually more defensive sectors. What is going on here?
Actually, the residential portion of the property sector has been very resilient, even in the face of the COVID crisis. Now, I think what we are just seeing now is normalization of that demand. And as we know, as the COVID crisis somehow lessens, no, I hope, no, the shift might be coming to the prospects, no, of commercial leasing moving forward. So I think the study of the BSP is just reflecting the normalization, especially on the residential portion of the property sector.
Okay, and this, Aaron, even as we come off of a very low base year in 2020, that means, it's far from a recovery. Can you say that it's going to take really a long time because we're still from a low base year, contracting even more than how we did last year?
Yes, definitely. No, again, for now, the income picture would still play a role. No, especially for the demand side in the property sector. As we know, well, while we have experienced some easing, no, in restrictions, and maybe some income sources have come up to be, well, not as negative as before. No, but definitely the income prospects moving forward might not be as normal as we want it to be. Thus, might be affecting those discretionary purchases, no, especially for properties.
Are we seeing all of these risks already priced in with one of the worst hit sectors, especially, the biggest developers here, which have been undervalued according to a lot of analysts? Can you already say that this is the lowest they can go?
As far as demand is concerned, I hope. I hope. No, I hope this could be the bottom of it. No, but again, as for my view about the market, no, and about the property sector or interest sensitive sectors in general, no, what I see in the trend of interest rates, especially with the 10-year yield in the U.S., it might be having some pressure to go higher. No, if we when we check the chart of the 10-year U.S. yield, we can see some very familiar bullish reversal pattern, no, which means the market, actually the 10-year yield can actually break the recent high and might revisit around 2.5 to 3% moving forward. So if going beyond the property sector and expanding the scope to interest rate sensitive sectors moving forward, then I think there could be some pressure at the very least, no, for those industries.
Okay, well, we're at the interest rate story here. Your reaction to the Banco Central keeping our rates at record lows, while of course you've got the Fed, slowly at least saying that they will start unwinding here. Is there going to be a flight from capital if we keep our rates quite low, especially since inflation is going up pa rin?
Yes. Well, as we know, no, the mandate of the Banco Central is twinfold, no, twofold, no, for growth and for controlling inflation. As of now, I think, no, even if with the threat of higher inflation and even in the face of reducing or risk of reducing the interest rate differential with that of the U.S., I think the market or the policymakers, the BSP, is putting some more weight on the growth. No? As we know, we have just come from a slump, and maybe they don't want to stifle that momentum if there is some momentum going higher, no, by increasing the rates. So, which I think is also the premise of policymakers, not just in the Philippines but also in other economies, no, especially the U.S. No, but in the U.S. they have instituted a lot of bond buying, no. They have instituted a lot of pump priming aside from the interest rate channel. That's why they somehow have that need not to really unwind, no, those previous efforts. No? But as far as the interest rate is concerned, at least the policy rates in both economies are concerned, the signaling of the policymakers is that they're putting more importance, no, or at least relative importance to the growth of the economy rather than controlling the inflation moving forward. Again, but however, no, the concern is not really the policy rate, no, but the market rate hinting some pressures, no, to be higher moving forward. So maybe the policy rate now is being made accommodative, no, to the needs of the economy. But then again, through time, when we see the secondary rates going higher, then the pressure could be on the policymakers to follow through.
Okay, so delicate balancing act, but for now focused on growth. Let's just touch a little bit on the Evergrande scenario. Is this in any way impacting our own property sector? Do traders see a risk of contagion here, or a repeat of 2008?
So far, based on my own assessment, no, personal assessment on an Evergrande issue, so far it hasn't touched our shores yet. No, I think no. And if ever it would be, I don't think it would be as grand as Lehman, no, or the 2008 crisis would be was, no, before, just because of its interconnection with both the real sector and the financial sector. No, so as we know, the crisis that happened in 2008 was far-reaching because of not a specific company but the whole property sector doing the same not so good things at that time, which they over levered using the banking sectors, the USS banking sector's resources. No, and as we know, the US is at the center of everything. No, so far, maybe not the center that it used to be, but still the center of everything. So when it went crumbling down in 2008, everybody followed. No? But for Evergrande, while it has the potential to be one, no, well, the structure of the economy is different. No, the response of the respective structure of the economy is different. And in this case, I think, no, I think China would not be as willing, maybe, no, to make this fail. No, if ever, no, if ever this would they would make this they would allow this to fail. Most probably, they would arrest a significant impact, no, from this failure in case.
Okay, so hopefully no contagion so far. What about the contagion to the emerging market currencies, particularly the peso? We've been seeing it weakening and breaking above the 50 levels. What is going on here? Is that linked just to this negative sentiment of Evergrande? Is that linked to our twin deficits and our growth story here? And how worried are you that this might impact, of course, our economic recovery?
My worry in the peso doesn't come from Evergrande, although it can worsen. No, it can worsen the trend that we're seeing now in the peso dollar. No, but my concern about the peso depreciating moving forward primarily comes from the potential reversal to a potential bullish reversal of the US 10-year yield, which is
Okay.
now actually causing recently for the US for the dollar index to move higher. No, so the 10-year yield is exhibiting again a very familiar bullish reversal pattern. No, when you look at the DXY, the dollar index, it's also showing a bullish reversal pattern. No? So with those and with inflation and among others, no, the peso, the pressure on the peso could still remain on the upside. No, meaning depreciation. The peso dollar could be on the upside. But not because of Evergrande. At least for now. At least for now. No. So we await for those developments. But for now, my personal concerns on the peso dollar is hinges on the trend on the US 10-year and the dollar, the strength of the
Okay.
dollar.
Okay, more than these regional issues.
Yeah.
Let's talk about specific stocks. I wanted to focus on airlines, especially with PAL also, asking for additional support measures to stay afloat. Of course, they've been suspended since mid June. How are you looking at this stock as a trader for when it starts trading again in the market? Is there going to be a significant revaluation of this stock, and how are you calculating that?
There might be an initial jolt, no, we're coming from a suspension, and usually, if the news is not that bad, no, the speculators might buy it up, no, and maybe the market could give it some upside, no, on the resumption date, no. But moving forward, if you look at the fundamentals, not only for PAL but for the airline industry in general, if travel if travel doesn't go back to where it was before, I can't see any possible upside from or even a return, no, from the previous trend for both the airlines, no. And and focusing on the local airline industry in particular, if we look at PAL and Cebu Pacific, they're both hurting. They have both requested in some one way or another support from different sectors, no, even in our own government, no, and in the case of PAL, in their creditors, no. If they ever come up from this relatively better, no, I think the competition would still be there, and competition wise, I think Cebu Pacific has the upper hand at the very least now from what we have seen prior to pandemic. So PAL in particular might continue to struggle even if we reopen.
Okay, very interesting points there. Of course, it depends how the traders will be feeling at that time when they do not exit from this suspension, and whether they do get those other demands into play. Thank you so much for those insights, Aaron Sai of First Metro Securities.
Thank you, Danny.
Checking in on other headlines, we're keeping our eyes on the Banco Central warned the public of possible illicit financial activities that may occur through play-to-earn online games. That is despite recognizing that the platforms have the potential to boost financial inclusion and digital payments in the country. The BSP advises those engaging in these games to be thoroughly aware of how they work, as the digital space provides a borderless and wider playing field for fraudsters or cybercriminals to carry out illicit financial activities. The central bank added that users should exercise caution in participating in these plays to earn games, as there is potential for abuse, hacking, theft, and cyber threats. Earlier, the BSP noted that play-to-earn online game Axie Infinity is not yet registered with regulators, although it is keeping a close eye on its activities as it continues to become popular among Filipinos. The Agrarian Reform Department is looking to distribute housing units to at least 600,000 beneficiaries before the end of Duterte's term. The DAR's implementation of the Balay Farmers and Farmworks program provides an agrarian reform beneficiaries with duplex-type housing units with 2 bedrooms each, covering 36 square meters. But these units will be paid for by farmer beneficiaries through their cooperatives at about 1,500 pesos a month. That's payable in 30 years. But DAR Undersecretary Emily Padilla said the land for the project, including their development and provision of livelihood, will be free of charge. And that's a first look into the business day. Today is Monday, September 27, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.